What is going on? My name is Nick Frankich, or Pax, as you may know me in the gaming world. For a majority of my playing career, I was a professional PUBG player playing in North America at the highest level in the MPL. But more recently, I have focused 100% on content creation and educating the younger generations on how to invest your money and how to save your money. My goal is to help gamers like you understand the importance of investing in the stock market, real estate, and other forms of investing so that you can have so much more money later down the road. I'm not talking just an extra couple of $1,000s from investing. I'm talking millions of dollars as long as you start when you're young, as long as when you start early. I suggest starting when you're in your 20s, or if you can start even before your 20s and save just $100 every single week or $100 every single month, or just whatever you can, just invest that money and save it, and you're gonna have so much more money and thank me later when you're ready to retire. You're gonna have millions of dollars and you're gonna be so happy. So my YouTube channel right here is Nick Frankich. If you want to go check me out, go for it. I make videos every single week to help educate young people how to invest properly and how to make money through the stock market, through investing, and through real estate, and through many different avenues. It's extremely important to start investing today and start learning about every single thing that has to do with investing and turning your money into making more money. Understanding what type of investor that you want to become so that you can smartly invest your prize winnings and salary and anything that else that you make from esports is gonna be such a great place to start when you're worrying about making so much more money. Do not make the same mistake that I did when I was younger and competing every single day. I was playing video games pretty much 12 hours, 14 hours a day, competing against the best in the world, and I made so much money that I honestly spent so much of it, and I wish that I knew which type of investor types there were, and I wish that I knew anything about investing in general. So hopefully today's video is going to show you exactly what type of investors there are out there and which opportunities there are for you, and hopefully you will do your research on some of them and actually start to learn how to start investing in the stock market, how to start investing in real estate and anything like that, so you can turn your prize winnings and you can turn your salary and all your money that you make out of gaming and esports into something huge. So let's get right into the video. So I've got a ton of comments lately asking me, Nick, which stocks are going to be making me the most money? How could I make the most money by investing in the stock market? Can you please give me tips for investing in the stock market right now? Because I feel like I need to be making more money than I already am. The number one tip that I gave every single one of these people that have asked me and reached out to me about the stock market and just these general questions about how to make money is to stop thinking about the stock market like you would the casino. Now, I love the casino. I've been gambling since I was 18 and I made a ton of money on craps and poker and a bunch of other games like that, but that's honestly besides the point. The point is when you go to the casino, you automatically, you're accepting the fact that you're probably going to lose. Now, I get super happy when I either break even for being at the craps table for about 3-4 hours, or if I make a couple $100, I'm very happy, of course. But if I do lose, I lose that $200 or $300 that I started with, and I'm okay with losing that. That is the complete opposite way of thinking when you're talking about the stock market. And that is the number one mistake that new investors come in with their mindset in the stock market, is that they think it's the casino. They act like, I have a little bit extra cash, maybe I can turn it into $1,000. Although some people could be very lucky and end up turning their $1,000 investment into $10,000 very soon. That's just not realistic. So today I'm going to help you guys figure out which type of investor you want to be and which one you would like to be based on the criteria that each investors meet. And I'm going to quickly go through all of the different types of investors that you could be in the stock market. Now, if you are somebody that likes to invest in the stock market and wants to learn a lot about how to invest and make money in the stock market long term, make sure to hit that subscribe button down below in the bottom right hand corner and turn on that bell notification to be notified when my videos go live, as soon as they go live, to be updated on the stock market and also how to gain a passive income and become wealthy and rich in the stock market. Also, make sure to give this video a thumbs up. By clicking that thumbs up, my videos get ranked higher and we can help a lot more people out. That is my honest goal, is to help you out, help people out in the working class to help make money in the stock market so that they can retire early and not depend on their 401k for very long. So share these videos to your friends, to your pets, to anybody you know. If you do, I love you. Anyways, let's get right into the first type of investor. The first one is penny stocks. Now, penny stocks are generally any company that stock price is valued under $5 per share. I'm sure you've seen the movie of Wolf of Wall Street, where Jordan Belfort makes millions of dollars just on penny stocks and trading penny stocks. He basically tricks people and investors into letting them know that there's stocks that you could buy for just $1 or 50 cents. And you could buy tens of thousands of shares of these penny stocks, and eventually it's got to go up because it is a stock, and people just buy these stocks like crazy, thinking it's going to be the next Apple and thinking it's going to be the next Microsoft, and they think the sky's the limit. If I buy in now this early, 10 years from now, 5 years from now, even, it could just get up to $5 and $10 and $20 and be this huge corporation and this huge company. And for the most part, it's just not going to happen. The thing that happens the most in penny stock trading is what's called a pump and dump. Now, the pump part is when people buy into the market early and then they pump the crap out of it. Like, what, for example, they'll just create news and say, oh my God, the CEO just got followed by Donald Trump, and that means that this stock price is going to go super high up, and maybe they found the cure for this disease and this stock price is going to shoot up. And what happens is people that don't know anything about the stock market, don't know anything about stocks or anything, they have a couple $100 laying around, they're like, oh my God, maybe I could be rich by investing in this company. So they quickly buy into the company. They don't care, they don't read, they don't do their homework on the company at all, and they just buy the shares, and then 2 days later, boom, it drops down to like a quarter per share. And they're like, what happened to the $2 per share that it was, and that it was going to say it was going to be $50 per share and I was going to be rich? That's what pump and dump is, guys. They pump up the market, they pump up that stock, that penny stock, and then as soon as they think it's at the peak and they made enough money, made it like 100% return, 200%, 250 sometimes percent return, and then all the rich people that bought in and pumped it up in the first place sell it, and then you're left with absolutely nothing. But there are a lot of people that do see value into buying in penny stocks. I'll be honest, when I first started investing in the stock market, I did try my hand at penny stocks. I bought a stock that was worth $1.25, that it was like the best stocks of 2017, whatever it was. So I bought it, whatever. I had $200 to spare. I was like, you know what? I'm going to do it, but I'm not going to be greedy. I'm just going to sell it when I double my money. Well, I tripled my money, sold it, and what happened the next week? Went straight down below what I bought it for. I would have lost money if I wasn't smart and was greedy. So there is some sort of value with penny stock trading. So if you're interested in that and you're interested in kind of like the gambling side of the stock market and being extremely risky and not really caring about what happens to your money, then maybe a penny stock investor is the one for you. So next up is being a day trader. Day traders make a lot of money. Every single day trader I know has millions and millions of dollars, has a bunch of houses, has nice cars, just sits in their room all day, studies the market, buys low, sells high, makes their money for the day, and they could make thousands and thousands of dollars in a day, but also they could lose thousands and thousands of dollars in a day. That is the risk that is involved with day trading. Day traders are defined as people that make intraday trades. So for example, think of a wave. The wave goes down and then it goes back up. So what day traders do is they buy at the lowest point and then they're hoping that the stock price goes up and then they trade it at the highest point, and that difference is their profit or loss. So sometimes what happens with day traders is they'll buy at the lowest point thinking that it's going to go higher, and then it ends up dipping lower. There are different strategies to limit that loss. Like you could set a stop limit so that you only lose a little bit. There's a lot of different strategies out there that I'm not going to go over today, but that is just the gist of day trading. Now, if you want to learn how to become a day trader, I'm telling you guys, it is probably going to take a lot longer than you think. A lot of people that start day trading end up doing what's called paper trading, which is where they trade in a simulator with fake money on the real stock market, but it's fake money. It's all in a simulation. So they do this for a year. They're like, you know what? I'm ready. I've made consistent gains in the simulator. I think I know what I'm doing. And then as soon as they start with their first $10,000 or say $1,000, whatever they can start with, 90% of people that start day trading completely wipe out their first account. And that is the truth. It takes a long time to be a good day trader. It could take 1 year, it could take 3 years, it could take even 5 years to learn how to become a successful day trader. It is very, very difficult, but if you are somebody that is very committed to the grind and someone that wants to learn a lot about day trading and about the stock market itself and about a bunch of different companies, then you will definitely find success as a day trader, and it could be very, very profitable in the long run. Investing in real estate is the third form of investing, and this is an absolute great one. This is where you hear stories about people buying houses low and selling them very high and flipping them for a huge profit. There's another section of real estate investing where people buy houses that are unfinished and need work. They build the house up to the potential that it could be, and then they sell it for a massive price. But that also takes a ton of extra work and a lot of handyman work that takes a long time to learn, and also takes a lot of trial and error on what works and what doesn't. Another type of real estate investment is you buy a house and you just rent it out for more than the mortgage is worth, making you extra cash flow and passive income over the long term. And I love the idea of that one. Creating a passive income that pays for your mortgage and for the house, and you get extra money on top of that, is a great idea for earning money in the real estate market. And the last one is the investment into what is called REITs, or real estate investment trusts. This is another one of my favorite types of real estate investing because you don't actually have to buy a physical property. You don't have to deal with any of the hustle and bustle of turning a profit in a house and waiting for a long time and going into debt. It's simply a stock that you can buy in the stock market in the form of a REIT. REITs pay huge dividends, which is great for long-term dividend investors, and they're also pretty darn good growth stocks for the long term. And REITs are companies that own buildings like malls or hospitals or huge buildings that other companies have been using. Now, the very big downside to becoming a real estate investor, if you're one to buy houses and turn a profit that way, is the fact that you're going to be in great debt for a while. And if you're not comfortable and not very knowledgeable with how to control that debt and how to make your credit perfect, then you're going to see a lot of issues and you could be going bankrupt and have absolutely no money and living out of your car. So that's something that I'm interested in, but maybe by the end of the year, I'll become a lot more knowledgeable on how to actually flip houses and become a real estate investor, because that is exactly what I kind of want to do long-term down the road, but not necessarily right now when I'm starting out in the stock market. Next up, we have options trading. Now, I'm going to be honest with you guys. I have looked a little bit into options trading and I still am super confused as to how it works and the kind of the philosophy behind it. Now, I have seen a lot of people with great success trading with options trading, and if you know how to do it right and know how to do it properly, you could be very successful at it. I know the concept of it is basically when you think the market is going to go high, you buy what's called a call option. And then when you think the market is going to go down, you buy what's called a put option. Now, that is pretty much all I know. There's terms like a premium and a bunch of crazy different scenarios and terms that I really honestly do not understand. But someone that could definitely teach you a lot more than I can is someone by the name of In the Money on YouTube. Go ahead and search him up if you're interested in options trading. He explains it a lot better than I can. Now let's move on to the next type of investor. So the fifth investor type is cryptocurrency. Cryptocurrency is something that is kind of like an idea at this point. It is something that a lot of people have been raving about. When I was in college in the last couple of years, so many people were talking about cryptocurrency. Heck, I even jumped on the cryptocurrency train. I invested about $800 into what was called Ripple when it was really cheap. I bought it for, I think, 10 cents per share, essentially per Ripple coin. And I ended up making 4.5 times my money, and I made a lot of money from that. Then the cryptocurrency market just absolutely crashed, and a lot of people lost a lot of money. And it's just one of those things that is, in my head, it was more of like a pump and dump scenario with penny stocks, but in the terms of cryptocurrency, and I'm just honestly not a fan personally of cryptocurrency. But people really don't know what the future holds for cryptocurrency. A lot of people have been saying that it's going to be huge. Bitcoin could be worth upwards of $100,000 or $200,000 per Bitcoin, and that might be very well possible. Like, it actually could be, but I don't know, and I honestly don't want to invest like $10,000 for one Bitcoin in hopes that maybe this digital coin ends up making me hundreds of thousands of dollars. One good way of actually utilizing and trading cryptocurrency, for example, is buying Bitcoin at around like 6,000-7,000 and then selling it at around 9,000 to 10,000. If you swing trade Bitcoin, you could actually make a decent amount of cash, and that is not a bad way to actually make a lot of money. But I will say that be careful when investing in cryptocurrency. You don't want to invest more than 10% of your overall portfolio into cryptocurrency in case something crazy happens and cryptocurrency is just a big hoax and a scam. So now we start to get into the more slower types of investing where there is less risk involved in your investment. Index fund investing can be a very profitable way to make a lot of money long-term in the stock market. Just look at the second richest man in the world, Warren Buffett, who is one of the most famous investors in the entire history of the stock market. He values patience, logic, and discipline in his investing, which are all really good components of a really good investor. And this is pretty much the secret to long-term wealth and long-term gains in the stock market. So one comment that stands out from Warren Buffett that in fact he tells his own family is to invest into low-cost index funds long-term. So if you're somebody that doesn't want to look at individual stocks every day and study a bunch of different stocks every single day when you're ready to invest your money in the stock market, and you're just looking to put your money into a very good long-term growth stock that also pays out dividends, so you can put even more money into your ETF or other stocks, then this is a great idea and a great investor type for you. Next up, we have the ultra slow moving bonds investor. Now, to me, bonds are super boring. This is pretty much what your grandpa or your grandparents would tell you to invest in, because that was the thing that everybody was investing in when they were our age. Bonds provide long and slow growth over time. So think of it as pretty much like an IOU between the lender and the borrower. Now, the interest payments is what you make money with bonds over the long term. But pretty much due to inflation, you're not really going to be making that much money in the long term, and you actually could probably lose money in the long term since there's a lot of money being printed right now. So if you're somebody that likes very small profits and really doesn't want to pay attention to the stock market at all, there's not a lot of risk involved, then maybe being a bond investor is for you. And lastly, my favorite way to invest in the stock market is become a dividend investor. As a dividend investor, you get paid money either monthly or quarterly, depending on which companies that you are investing in, money to invest in those companies. So dividends are a portion of the company's earnings that are paid out to its investors as pretty much like as a thank you for investing in us and believing in our company. Here's a couple extra dollars back on your investment that we use to make even more money. And the secret to making a lot more money in the stock market is what's called compounding your dividends back into the stock market and buying more dividend paying stocks, or even buying more stocks of that same exact company, and they give you even more dividends on the next payment. You do this for 10, 20, 30 years even, and you're gonna have a boatload of extra money and extra cash. Like, who doesn't want to be paid to invest? So if you're somebody that wants to make more money in the stock market and wants to generate a passive income through dividends and pretty much make money for doing absolutely nothing, then maybe the dividend investor type is the one for you, like it is for me. That is it for today's video. Again, if you enjoyed today's video, make sure to give it a thumbs up, and also make sure to subscribe to the channel right down there. Have a great rest of your week. And my name is Nick Frankich, and this is my journey to making $1 million in the stock market.